Mama. All right, let's continue this part two of the class. So I was talking about real accounts and how to know what to debit and what to credit. Now I gave the inner scenario of nominal accounts, right? I hope I've not gone past that, but just in case, I need to just do some recap. I didn't know I was not recording, so I just have to start somewhere so that you can join with the other class. Please don't be offended. My bad. Okay, so that I was saying we have types of accounts. We have nominal, real, and personal account. Now, nominal has to do with what your expenses. Are we together? Well, then you also have things like your income. So whenever you hear the word expense or income, or you have to pay for rent, or you have to buy, you have to pay for salary, any expense you incur to enable you run your business on a day-to-day basis will fall under your expense account. And so there's a law guiding every account. If it's a nominal account, you're going to do what? Debit the expense account and then credit the income account as the case may be. And I think I talked about what an account looks like. An account has two sides, left hand side and right hand side. The left hand side is your debit hand side, while the right hand side is your credit side. So let me find a place to draw it so that we can clearly see this. Please bear with me with our small space. So every account looks like this AC. So the debit side is your left hand side. Are we together? While the credit side is your while the right hand side is your credit side. Are we together? Your left is your credit. So your left is your debit and your right is your credit. Are we together? So now, whenever you have a normal account and you hear the word expense, I paid rent 10 million naira. That tells you this is a normal, this was a nominal account. What will I do? I will debit my nominal account. Are we together? I pay salary 5 million naira. Rent, salary was an expense. And expenses are any cost you incur. It enables you run your business on a daily basis. As long as it's not goods that you purchased. Are we together? Things you must pay for. So that your business can run smoothly. You pay your staff money so your business can run smoothly. You pay NEPA bill so you can always have light. So all these expenses, whatever you incur, as a business you run smoothly without any hitch is what's your expense. And so every account have its law. So once an expense account, you're going to do what? Debit that expense account. But with an income, let's say by the time you have made sales, you deducted your expenses from your sales, you now had more money, that is your income. We've not talked about sales here per se, but I want us to just understand that whenever you have an income, you're going to do what? Credit that what? Income account. Are we together? So let me give us this very simple scenario so we can connect this together. I don't want to just be talking. I want to be able to have some connection. So let's say, for instance, you're told you paid rent in cash, 10 million naira, for instance. Now, which account am I going to open? Like I said earlier on, every transaction affects what? Two accounts. When I say transaction, I mean activities that happen in your business, be it sale of goods, be the one purchasing goods, be a customer coming to buy things from you. As long as it's involving exchange of goods and cash, these are activities in your business. They are called what? Transaction. So once a transaction has occurred in your business, two accounts more often than not are being affected, and one account must be debited, meaning one must be recorded on the debit side of one account and the second account to be what? Credited. Are we together? So in this case, we're told paid rent with cash, 10 million naira. Two accounts are being affected. True or false? Your rental account is an expense account. That falls under what? Your nominal. Now your cash account falls under what? Your personal account. Personal account means account that has to do with persons. Cash account is a personal account. Bank account is a personal account because people are one that own the cash. Open the bank account. Are we together? Debtor and creditor, they are also personal account. Who is a debtor? A debtor is a customer that comes to buy things from you on credit. Let's say a customer now that comes to your shop and he buys, say, goods worth 5 million naira. He did not pay you cash. He has changed from customer to what? Debtor, and he's owing you. He's owing you. You understand? So anybody that's owing you money, your customer is called what? A debtor. But when you're the one owing, you're the salesperson, you now go to your supplier, say, oh God, I want good 150 million naira, but I don't have cash. I will pay you what later. Oh, well, basically. Yoruba will call it gbese. In that case, you, the person that is selling, you're now a creditor. Sorry, the person that gave you goods on credit is your what? Creditor. Your supplier is your creditor. So you're owing him money. So in that case, you're the customer, oh, but you will call the supplier what? Creditor, because you're the one owing him money. So when you're owing your supplier money, it's called what? Creditor. When your customer is owing you money, call them what? Debtor. You just link it together. C is for customer. After C, letter is what? D, debtor. But when you're now the person that sold, and you're now the person that is the customer to your supplier, it is called what? Creditor. Just remember, supplier equals to C, creditor. So when you buy from your supplier, you bought on credit, it's called what? Creditor. That supplier changes from supplier to what? Creditor. He's still a supplier, but for us, remember credit and debitor. I'm trying to just help us easily link it. Now I got you. I got you. All right. So now all these are personal accounts. Now there's a law for every account. Are we together? For personal account, whenever it is cash, bank, debtor, creditor, you're going to debit. Whenever you're the one was receiving, if you're receiving, you're going to debit your creditor account. While if you're the one giving, maybe you're giving out cash, as the case may be in case of cash or bank, you're going to what? Credit the cash or bank account in that case. But if you're the one receiving cash or receiving money, you're going to what? Debit your cash or bank account. So that is how you treat what? Personal account. You understand what I'm saying? Now let's give a very typical scenario so we can link this personal account. Let us say I'm just talking blah 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 blah. So we're told that you sold goods on credit. Are we together? Now two accounts are going to be affected. Like I said, for every transaction, two accounts are being affected. Now sold good on credit. What does that tell you? Sales has occurred and credits now. You sold goods on credit to your customer. That customer is who? Your debtor. That's what a personnel account. You see, you don't have what your debtor account, you don't have what your sales account. Whenever there's a sales account, you're going to do what? Credit your sales. Are we together? Just like we have here, normal account. Whenever you have your income, the same thing that happens to your income happens to your sales. So let me put income slash sales so that we can know that whenever we have to, it has to do with what? Credit. So in my sales account, I'm going to credit my sales account. CR. You see that there? Then you're going to do what? Debit your debtor account. So understand that very, very easy. So you're going to what? Debit the debtor, the creditor, the customer who is now owing you is a debtor. You now debit his account, and then you're going to credit your sales account. I've done that already. I didn't know my this thing wasn't recording. I'm so sorry about that. I was busy putting on my action. Unfortunately, I now saw that my video was not recorded, so please bear with me. I hope this is as good as what was the initial accent then. So this is the answer. You debit your debtor account because you sold on credit. You sold food to customer. Are we together? And we said you debit the receiver. You're receiving goods. Do you understand? You're receiving what? Goods on credit. You're going to do what? Debit that transaction. And then you sold the goods. Because you made sales. And we said when you have sales, you're going to do what? Credit. You can see it's very easy. Just understanding the law and then being able to link it to the transaction in a real life scenario. It's simple. You don't know what to debit and what to credit. Are we together? My teacher wants to write for us, but she doesn't know she's supposed to write. Madam, that is stopping us. You want to write? Eh? Now come and write here. Stand there and do your writing. Yeah, excuse me, please. Madam, so Maya, take write. Write here, yeah? Mama, write your own writing. So we can have peace. She has to write also. Alright, let's continue our class. That was very wonderful. Now, another scenario. So, talk about normal accounts and personal accounts. We now know how to use it properly. Now let's talk about real accounts. Real accounts are about assets. Assets are real, you can touch it. When you hear the word assets, they're making reference to what your real account. And the law for the real account says that whenever your assets are coming in, you're buying laptop, you're buying share, you're buying furniture, all these are assets. And assets are resources that belong to the owner of the business that last for more than 12 years so that you can run your business. So assets are things that you buy so that you can what run your business smoothly. But they last for what more than 12 months. Unlike things like rent. Rent and salary are not expensive. They're not assets. They are expensive because if you don't insure them, you cannot run your business. But the difference is that expenses are run so you can run your business smoothly and they last for what? Within 12 months, not more than 12 months. Are we together? And they are not bought because you want to sell them. They are things money you must spend. Let me put it that way. Money you must do what? Spend. So that you can run your business. That's like expenses. Any money, anything you buy so you can run your business smoothly, like you pay light bills, an expense. If you don't pay, like, can you do your business? If your business require, like, you cannot do your business now. No. If you don't have a rent, a shop where you sell, can you do your business? No. So any cost you incur whenever you run your business smoothly on a day-to-day basis is what expense. There are types of expense which I'll talk about in our future class, but I want us to just understand so we don't mix expenses and assets. That's something give this, demarcation. But our aim here is debit and credit. Are we together? So, like I said earlier on, so whenever you're buying more assets, you're buying more shares, they are coming in. The rule is that you're going to debit. Ah, my madam wants to write though. My madam, write here, please, mommy. Sorry, that's our co-teacher. Right here, mama. Yeah, right there. Thank you. I love you. Now the rule is that for your debits, for your assets, you're going to debit when they are coming in. Now when you have need to sell, maybe you're trying to dispose some assets. Maybe you use it for a very long time, no longer work in there. Papuka, Rabadaya, you want to now sell them. You're going to have to give them out or sell them or dispose them. Whenever you're disposing your assets, they're going to do what's credits. Are we together? So that is the law. So every asset, every account, sorry, has a law. So let me quickly recap. We have three accounts: real, personal, and your normal account. Now, the law for normal account has to do with your expense and what? Income. I don't want to make it like a cramming. I want to be like what you can understand easily. That's why I like to give examples like life scenarios. It doesn't feel very boring. So let's just stick with that. We hope they're going to help us to easily understand. So let's say you bought furniture with cash. Which account will you be affected? Furniture accounts, correct. If you will, and your cash accounts, correct. Now, which account is the furniture account? Is it a real asset or nominal? Furniture is what? A real account. Are we together? And then cash account is what? A personal account. And what does the law say? In your cash account, personal account, you're going to what? Debit the receiver. When you're receiving money, you debit it. When you're giving out money, you credit it. So in this case, you paid for furniture with cash. You are giving out what? Cash. You're going to do what? Credit that cash account. And then because furniture account is coming in, remember we said asset with account. When it's increasing, when it's coming, you what? Debit. You're going to what? Debit your what? Furniture account. Are we together? I did that here for us. So you debit your real account and you credit your what? Cash account. Hope I'm making sense. Okay. Now let's do one last example. We said paid rent for cash. I want to just recap this. So I don't know if I missed it earlier on. So just flow with me. So we said paid rent for cash. Which account will be affected? Rent account and your cash account. Where is your cover? Where do you keep it? Cover. Take. So you're going to open what? Your rent account, what? Your cash account. So see, it's very easy. What does the law say? The law say you're going to debit expenses. Rent is what? An expense, right? And they're going to do what? Credit cash. In this case, cash is going out. Just like the law said, credit the giver. You're giving out cash. So cash is going to credit the giver. And then your expenses, you do what? Debit. So I hope I've been able to convince you and not to confuse you. Now, with this account type, with this classification, you can even know what to debit and what to credit without stress. Now, there's also another method used for knowing what to debit and what to credit. This is called using elements of accounts. Everything we do in accounts revolve around this thing, whether they're asset, expense, income, or liability or equity. This is what makes everything we do in accounts. Now, madam, stop cleaning my board now, please. See by quiz I gave my students, you're cleaning it. Mama, stop it, please. Please, I beg you. Okay, let's do a very short quiz. Since my madam is cleaning that part of the board, don't be offended. We are told to pay salary with cash. Which accounts will be open? That's all I want. Tell me the accounts that will be open. You're told to pay salary with cash. Which accounts will be open? Salary account, cash account, rent account. Which account? Tell me the account. Which will I debit or which will I credit? Second question. Receive cash from customer. Which account will I debit? Which account will I open first of all? Debtors account, cash account, creditors account. Which account will I debit? Which account will I credit? That's the next question. Third question. Bought goods on credit. Which account will I open? Purchase account, expense account, creditors account, or debtors account. Which account will I debit? Which account will I credit? That's the next question. So every transaction has two questions. Which account will I open first of all? Which account will I debit? Which account will I credit? And using this formula I taught us, we can know which to debit and which to credit. Now, like I was saying, there's another formula using the elements of account: asset, expense, income, liability, and equity. Now, the law is similar to this one, but it's a little bit, in fact, it's a little bit different, but just flow with me. Now, assets, when your assets are increasing, you debit. It's similar to what you have here in your real account. When your assets are coming, you do what? Debit. Same thing. When your assets are increasing, you debit. Are we together? Now, when your assets are reducing, so you have to dispose some or sell some, you do what you're going to do was credit your asset account, and that means you're going to write information on the right hand side of your asset account. So let's assume this is the asset account, for instance, asset account. For lack of space, please bear with me. So on the credit side, I will now credit when I'm what when the assets are what reducing. But if they are increasing, I'm going to do what? Debit my asset account. Are we together? Now, the same thing with your expense. They are brother and sister. Asset and expense are brother and sister. They look alike, they are twins. So the same thing with your expense. When your expenses are increasing, you're going to do what? Debit that expense. But if it's reducing, you're going to do what? Credit the expense. Now I gave an example. You paid rent, or rather you're owing rent of 5 million naira. Landlord came and said, oh boy, your rent for this month is 5 million naira. So your owing me was rent of 5 million naira. Now, which account am I going to open? I'm going to open my rental account and my what? Liability account, because you're owing. Once you're owing the liability account, so open my rental account. I did that for us somewhere here. And madam, has she claimed it? No. So look at the rent account. 5 million naira, you're going to debit. So it's an expense. Okay? You know you're going to pay that money, that's for sure. Now you're now owing because you don't have the cash to pay. You open a liability account, rental liability account, 5 million naira, you're going to credit that account. Are we together? I'm trying to explain when you can have credit scenario in your expense account. Now, middle of the day, you now have some cash, 2 million naira. Now, so, I have 2 million, I want to pay the money I'm owing you. Now, in that case, your liability is going to what? Reduce from what? 5 million naira to what? 3 million naira. And your rent also reduce. It does not that reduces the actual thing, but because you're not able to pay, you understand? What your own is going to what? Reduce. So you're going to have what? Your rental, okay, no, your rent is still 5 million, no doubt, all right? But just that your liability account is going to reduce. So you're going to now pay 2 million naira. You will now debit your liability account. That's the case of debiting your liability account. Where I'm jumping the whole thing. But in this case, so you now debit your liability account. Okay, and then you now credit your cash with what? 2 million naira, because you're not able to pay. So cash, the asset account, you're going to do what? Credit it. Are we together? So that is a scenario of what? Asset being what? Credited. The same thing with your with the issue of disposal. Cash is an asset, so are your normal asset, they also asset. So expenses can reduce. So you just say you're owing some expenses before, like let's just give this simple scenario, but rental expense is still 5 million, but because you have been able to pay, I mean together 2 million naira, you can reduce from what 5 million naira to what 3 million naira. So you now have what 2 million naira. So the rental expense you paid some what you paid what 2 million naira. You now have what 3 million naira what rent from 5 million naira that you're owing to 2 million naira to 3 million naira. That's the liability you're owing. Hope I don't get so confused. I think that was a bit jumpy. I'm going to recap it slowly. Now, expenses can be reduced. When your expense reduce for any reason, you're going to do what? Credit that expense account. Let me just give you some that way for us. Work together. And when your expenses increase, you're going to do what? Debit your expense account. Now, an income can increase or decrease. When your income increases, that is when when you have more sales, more than your expense, you're going to have what income. We have not talked about income and what, so we've not talked about profit and loss account. That account, we're going to see income scenarios and loss scenario. But just know that income arises when your sales are more than your expenses. And when that happens, you're going to have what an income. And once you have an income, you're going to record that on the credit side of the income account. Are we together? Then you can also have losses. When your expenses are more than your sales, that's the scenario you can have loss in your business. And in that case, you're going to do what? Debit your loss account. Are we together? So now, liability. Anything you're owing is a liability. Are we together? If you're owing the bank money, a liability. Now, when your liability increase, let's say you're owing the bank 2 million naira before, you now say, oh, bank, please, I need extra 1 million naira for this business. Now, they now give you that extra 1 million naira. Now, that 1 million naira they give you, has it increased your liability or reduced? It has increased it. It has increased from 2 million naira to what? 3 million naira. So, by virtue of that increase, you're going to what? Credit your liability account. But if for any reason it comes down, let's say you now have cash of 500,000, let's say you now go to the banker, I have 500,000 naira, I want to pay. When you pay that 500,000 naira, will liability increase or reduce? Will it increase or it is going to what? Reduce? And because that reduce, you're going to do what? Debit your liability account. So, since my madam has cleaned some places, let us use here for that scenario of liability, so we can understand it. Okay, even this scenario clearly explains it, but let me do it again. So remember in the scenario we had a liability before of 5 million naira. Madam, my biro, the ink has finished because of playing with the other one. Please bear with me, customers. Hey, God Almighty. Just give me a second. Let me add some ink here, please. Oh, Madam, there's so much. Okay, let's just use our amount. Let's not make the class very long. Okay. So let's say you had a liability of 5 million like we had here before. And then we now pay 2 million naira. Remember that scenario I said we pay 2 million naira. We pay 2 million naira liability. It will now reduce from 5 million naira to what? 3 million naira. Are we together? By virtue of making that payment, our liability have what? Reduced. Whenever you have a reduction in liability, you're going to do what? Credits. You're going to do what? Sorry, debit. I don't want to get us all confused now. Maybe I'll continue in our next class. But understand that whenever your liability increase, in the case of say you went to the bank and you took 1 million naira, let me use that scenario please, and then you now went and say, Oga, I want extra 1 million naira. To give you that 1 million naira, did it increase or decrease? That increase your liability from 2 million naira to what? 3 million. So you're going to do what? Credit your liability account. When you have cash to pay that money back, let's say you have the whole 3 million naira to pay back, the liability reduced from what? 3 million naira to zero because you have the cash to pay. Are we together? So in next we're going to do what? Debit your liability account. I want to write a proper account, but my ink is finished and I don't want to waste our time. So just help me have an imaginary scenario of what I'm talking about. Please, I'm so sorry about it. Please don't excuse. I'm really sorry. But virtue of time, let me just teach it like this. And the last piece is equity. Equity is serving as what? Capital for simple layman business. Equity is what belongs to the business. Whatever belongs to you as the owner of the business. At the end of the day, money used to start the business is what? Capital. But I don't want to bore with what equity is and capital is. So let us start. Equity is similar to capital. Money used to start your business. Whenever you use money to start a business, that money to start a business was capital. And as time goes on, the business begins to grow. Maybe you begin to have investors, you begin to make more profit. All those things add up to your equity. That's what belongs to the business also. I don't want to go into so much details. I want to just understand that equity is same as capital for now. It's not exactly, but it's similar to it in a way. Are we together? For us to understand this application. And madam have filled here. Don't be offended, my student. Ejo, phone me. Okay. So when your equity increase, you're going to do what? Credit. And then when they reduce, you're going to do what? Debit. I hope I've been able to convince you and not to confuse you that debit and credit is very, very using this simple law we talked about. Please, I'm so sorry. I thought the thing was recording earlier on. You see the explanation I gave in that video. Oh boy, it was wonderful. But I hope this is also good enough. I want to thank you for spending our time. I want to thank you so much for making our time to spend with me in this video. I hope you've been able to learn how to debit and what to credit because it's very, very easy. I taught that in this class. If you have any questions, please leave it in the comment section below. I also use private tutorial. If you want a private tutorial, I can give you that class for free. That's a very free amount. Nothing is free, even in free time, but I can give you a free class if you want myself to that. I can also render for service to you. A very tiny amount. A very, very, very reasonable amount. Before I start blowing my mouth. So thank you so much for being with me. See you in my next class. I'm talking about ledger because that is the next lecture we're talking about. And you know that we just talked about daybook. After daybook, we're supposed to go into ledger account because daybook is the first book you record a transaction. And then those transactions you recorded now move into your what ledger account where they now sit permanently before you now go into profit and loss and other things. So we'll be talking about that in my very next class. But I have to come and break this down so that we can be able to connect. Because if you're not able to connect and know what to post and how to post, you may not understand the ledger account. So I hope you're able to understand this. Don't forget to like, share, and subscribe. See you in my next class. And before we end, as I will do the rain dance. Igwe, Igweji, Igwe, Igweji, Igwe, Igweji, Igwe. Everyone say Igwe, Igweji, Igwe, Igweji, Igwe, Igweji, Igweji.